Welcome everyone to Daily Rates Live with the Mortgage Calculator. We will get started here shortly once we go live on all the platforms. We are live on YouTube, Facebook, LinkedIn. And we do have the comments up. If you have any questions or comments, please drop them there in the chat. We'd be happy to go over any questions. Today's topic is going to be our prime jumbo loan. So basically the conforming version of jumbo, even though there isn't one. But that's essentially what we're talking about here. So a unique version of jumbo, not really the non-QM version that we're all used to. So specialty product here. Good morning, Warren, Caesar, Michael. Give a few more minutes here to get live on all the platforms, and we will get started. We had some good news this morning with the jobs report. So hopefully we have some good action today. The rates. All right, it looks like we are live on all the platforms. If you have any questions, feel free to drop them in the chat. I'm gonna go ahead and take that off for now so we can get into it. Welcome everyone, my name is Nick Hershey. I'm the president of the Mortgage Calculator. We are a correspondent lender that specializes in non-QM and non-traditional loans. Of course, we also offer all these standard programs as well. So what we do every morning here, we go over all these standard programs, and then we have Jose Gonzalez, our sales manager with 28 years of experience, go through a specific topic in order to explain a little bit more. Today, that will be prime jumbo loans. So jumbo loans are any loans that exceed the conventional limit. However, there are different flavors, as always, within that realm. So prime jumbo is basically a class of the jumbo loan, so it does exceed the limit. So it's not conventional, but the prime jumbo is a version that does use the conventional underwriting, also known as AUS, Automated Underwriting System, also known as DU. So these are jumbo loans that exceed the limit, but they're still full doc loans, and they still comply with every other guideline of your traditional Fannie Mae conventional type loan. So definitely a very unique spin. So Jose will bring those up in a second, but first, let me switch my screen and we will check the live rates for today. So this is our pricing tool for our team of mortgage professionals. This will show us the general rates and the APR for today. It is November 3rd, just after 11 a.m. Eastern. So all of our general programs are live. There has been some big announcements both this week and today. So we will definitely see some activity today in the rates. Maybe not quite yet, since it's the first issuing is just happening right now. But throughout the day, we should see some movement here. So this will show us the general rates and APR. If you'd like a full breakdown of all the fees and itemized loan estimate, please get with one of our team members. We have over 400 licensed loan officers in 24 states for our primary homes and our prime jumbo loans, which is our topic for today. So in order to compare across the different programs, we will set up the same exact scenario to compare apples to apples across the programs. So we'll set up a $400,000 loan amount. We'll set the LTV to 80% loan, 20% down payment. We're going to set the desired price to the lowest possible option we can show for the lowest rates. So we will compare the lowest rate options for conventional. Then we'll check out FHA, and then we'll go into our expanded guidelines, also known as non-QM, where we have over 5,000 additional programs. Remember, VA and USDA are only for certain categories. VA is only for eligible vets and active service members. So if you are eligible, just let us know. We can quote it, no problem. And USDA is only for eligible properties. If you do happen to be looking in one of those USDA areas, just let us know. We can quote it, no problem. We'll start today with our conforming conventional. We'll do a purchase, 30-year fixed loan. primary occupancy, single family home, 1 unit, state of Florida, county of Miami-Dade. And for all the demos here, we'll use a credit score of 760 and an estimated debt to income ratio of 40%. So with these settings, as we do every morning, let's check out the conventional options. All right, touch lower than yesterday. We always love downward movement. I think the next rate issue here this afternoon might be a little bit better too. And then Monday should be good as well. So excited to see Monday. Best option today, better than yesterday. Always love saying that. 6.875, 2.25 discount points at cost. Put the final APR at 7.083. Hopefully later today or Monday, we'll see some APRs under 7 again finally. So we're right there at the edge. Some great options for our conventional. Now, if for any reason our customer doesn't qualify for conventional, usually the next option we want to look at, we'll set up the same exact scenario. Usually the next option we want to look at is an FHA program. FHA allows more leniency on credit issues as well as a much higher debt to income ratio limit. So typically that's the next one we want to look at. And in this example, we'll keep everything else exactly the same. All we've changed is to FHA so we can compare across the programs. And definitely some downward momentum here too, 6.125. Rate 2.125 discount points and cost puts our final APR at 6.755. So as usual, FHA is actually a touch cheaper in this example if our customer qualifies for both. So definitely don't overlook FHA if you qualify for conventional and FHA. And for our customers that must use it, this APR does include all of the costs, including the upfront and yearly mortgage insurance. So some great changes to those programs are out there for our borrowers. And now, where we love to specialize at the Mortgage Calculator is if our customer unfortunately doesn't qualify for either conventional or FHA. Many other banks or lenders would have to deny that customer, but we have over 5,000 additional programs we can try under expanded guidelines. So when we click this option, everything else will stay exactly the same. However, we have a new option pop up for income. So we can change the income. So full doc is what we use for conventional and FHA. So if our customer doesn't qualify using full doc 2 years of tax returns, that's typically we'll choose a different option. So we have episodes of this show on all these different options. We have asset related options, business bank statement options, our investor options are just for investment properties. So we'll do that here in a minute. Personal bank statement 12 month is what we use for the demo. That's the most popular. We also have RSU, stated, VOE, 1099, P&L, no income, all kinds of different options. The most popular for the demo is the 12-month personal bank statement, and that's for our self-employed borrowers. Many times it's our self-employed borrowers, when they submit 2 years of tax returns, may have various write-offs, and may not qualify at all, or may just need a little more income. So we can solve that problem either way, no tax returns at all, just their last 12 bank statements for income, to determine a debt-to-income ratio of 40% in this example. Again, no tax returns at all, just using their cash in the bank. So many of our self-employed borrowers qualify for double or more income and can therefore get the home they really want. So let's check out the non-QM bank statement options. Ooh, I might actually be able to present this one, even though it is close to the limit here, Jose. This option, 7.5 rate, 3.375 discount points and costs, so I actually can talk about it today. Puts the final APR at 7.646. This option is full doc, that's not applicable. And this other option, 7.75 rate for 2.375 discount points for 7.863 APR. So a couple good options here for bank statements. If you see here, if we scroll down, there's dozens and dozens of different options, if not hundreds of variations here. Some of these at higher rates and costs may allow foreclosures, bankruptcies, may allow us to use different ways to calculate income, all kinds of different options. And if you notice the title here is jumbo, these are non-QM jumbos, right, where we can use alternative income. Jose's today talking about prime jumbos, which are different than this one, right? But these are great options. This is probably the most compliant option. This one might be pushing the limits, but both are great options using bank statements. Now, for our final demos, we always want to do some live pricing for investment properties. So we love working with investors, new investors, seasoned investors. We love showing our options here. So we'll set up the same example, 400,000 loan, 80 LTV, 20% down, and we'll find the lowest rate options we can offer for our investments. And we'll do conforming conventional first and then go into non-QM. Remember, government programs, FHA, VA, USDA do not work for investments. Start with conforming, conventional, keep everything the same as our other examples. All we've changed here is the occupancy to investment. So we can see the adjustments that conventional has added here. All right. Portfolio's way down here now, Jose. So conventional's coming back. So true conventional is beating the portfolio. Remember, for the last couple of weeks when rates were crazy, portfolio was beating the regular stuff by a whole lot. Not so much anymore. So this is cool. So best option here at the top, 7.374 rate for 3.25 discount points in cost. Puts the final APR here at 7.616. So finally, some good options back in place for conventional investments, which have been very difficult recently, especially at high LTVs. And as you've watched the episode for the last couple of weeks, this portfolio option kept popping up. Remember, it's not quite a conventional. It's not Fannie or Freddie. This is a portfolio, as in one of our outlets holds this loan themselves, but they follow all the same guidelines. So sometimes this option is cheaper, but today, with the changes to the jobs report and the Fed announcement, conventional is coming back. So this is awesome. And for our final demo, we'll do investment property, 80 LTV again. And we're going to find the lowest rate options for our non-QM. So now that we do non-QM investment property, we have a couple options pop up. First off, we must select the income. For investment properties, the most popular income option by far is our DSCR option because it doesn't require any employment or income or documentation on that from our borrower. Simply use the estimated rental income from the property to determine a DSCR value. It stands for debt service coverage ratio. If the estimated rents can cover the PITIA of the mortgage and the property basically cash flows monthly, that's a ratio of 1.0 or higher. If the property does not quite cash flow monthly, that's a ratio under 1.0. We still have options there. For the demo, we always put 1.5 so we can see all the best options pop up. And finally, a prepayment penalty is standard on these programs, so we always choose 3 years. There are options for 0 that will limit how many loan programs show up and cost more. There are also options for 5 years, which does limit the amount of loan programs, but does save some money if they do work for your borrower. Since 3 years is standard, that's what we'll use so we can show the most options here. So let's check out the DSCR rates this morning. All right, so some downward momentum. Again, non-QM doesn't move as violently or quickly or drastically, however you want to describe it, as conventional. So I believe this is the same as yesterday. But great options here, 7.75 rate, 3.5 discount points in cost, puts the final APR at 7.9. So there was a couple weeks here where DSCR was beating conventional, which was absolutely amazing. Today, conventional is coming back to normal. So today is the first day in a couple weeks that actually DSCR doesn't beat conventional. So 7.9, we're a touch higher than conventional, but I'd still say 99 to 100% of investors that compare a conventional to a DSCR, even if the cost is 0.3 higher or so, like we have here, will choose the DSCR. And even if the cost is 1 or 2 points higher on the final APR, most investors will still choose the DSCR. So a lot of flexibility afforded with this program. You can start 1, 2, 5, 10 loans at a time, refinance multiple properties, no employment or income documentation needed, just a ton of different options here. So if you scroll down, you can see there's other options too. Some of these higher rate and cost options for DSCR may allow things like bankruptcies, foreclosures, credit issues, may allow us to use short-term rental income calculations. Tons of different options here. And now we've gone through the live rates. Let me go ahead and switch my screen. And we'll go through our topic for today, which Jose Gonzalez, our sales manager, 28 years of experience, is going to go into prime jumbo loans. So as I mentioned earlier, I don't think everybody was watching earlier. We got some more people tuned in now. But prime jumbo is a flavor of jumbo, right? Jumbo is essentially just a general term that means greater than the conventional limits, right? So This year, that's about 726,000, I believe it is. So anything greater than that is going to be considered a jumbo loan. But there's a ton of options once you go past that, right? Anything considered jumbo or greater than the limit is going to be technically a non-QM loan because it's not a conventional loan. However, this flavor of jumbo is as close to conventional as you can get. That's why they call it prime jumbo, because it's going to use all the same everything as the conventional option. The only thing different is the loan amount is greater than the traditional limit. So prime jumbo is a jumbo loan that uses AUS or DU, automated underwriting system or DU, to approve the borrower. The DU will say approved, ineligible, and the only reason ineligible for the borrower will be the loan amount exceeds the limit. Everything else, as far as the credit, DTI, all those kinds of things, need to be approved by your traditional automated underwriting system. So we can think about this like a conventional loan on steroids, basically. So it's kind of an in-between. This is not the true non-QM options, which you saw me do like the bank statement options, right? This is still full doc. It's as conventional as it gets. The only thing different here for a prime jumbo is the loan amount is greater than the traditional limit. So hopefully that sets it up for you there, Jose. I don't know if you want to explain a little bit more, but I'll go ahead and pass it over to you.
Good morning, everybody. Thank you for joining us for our Prime Jumbo show today. A lot of exciting stuff going on at the Mortgage Calculator. A lot of exciting stuff going on in the market. So we always like to keep you guys ahead of the curve in all these situations that are going on. And we are seeing some good movement in the Prime Jumbo realm. I was just commenting to Nick earlier when I was going through the rates that they are very similar to conforming rates, even though we're looking at essentially a jumbo loan. What makes it prime, besides being full doc, is that it uses automated underwriting, specifically DU, to qualify the borrower. So you do get a lot more streamlining in your underwriting, especially, for example, self-employed borrowers looking for that 1 year option on your automated underwriting. Always awesome. Less conditions, better rates, as you will see in the show. So, there is a lot of money in secondary, and it is obviously chasing certain segments. So we really feel that they must feel comfortable with the prime jumbo market. The one thing also to note on these loans is beware of the maximum LTV. A lot of them have the maximum LTV at 89.99% and not 90% when you are looking to structure your deals. And also, mortgage insurance is also built into the rate. So there is not a separate mortgage insurance expense for LTVs at 80.01 and above. So that's another factor to consider because I am showing you options at 89.99 and 85%. So let me share my options with you here. First option that we have is a prime jumbo primary 1 unit purchase. And we are looking at 9.5% as our lowest cost option. And you can buy that down to 8.375%. And this is maxing it out 89.99. And then we have our prime jumbo option at 85%. I wanted to show you all the progression of the rates as we go into the more traditional, quote unquote, right, prime jumbo sector. Here we're at 85%. So you do see a precipitous drop in the rates. You're looking at 8% here, lowest cost option, and you can buy it down to 7.875. So not a very deep rate sheet, but definitely a very good one for 85% LTV, considering mortgage insurance is already included in the rate. You can see there, I'm doing this example on a $1.1 million purchase price, $935 loan amount, and $165 down payment. in the South Florida area, in Broward County, where I'm doing this search. Um, that is a jumbo loan. And now 80%, same 1 unit primary, but now look at those rates. You're looking at 7.75% rate with only 0.375 points, which is pretty amazing. You can buy that down to 7%. That's what piqued my interest when I mentioned to Nick about how amazing these rates are. Now, for our house hackers out there who we love, both investors and MLOs, you're looking at a 2 to 4 unit primary purchase. So assume this is a 4 unit because the system does. Uh, I do set it to 4 units, and you're looking at 9% lowest cost option. You can buy that down to 8.5%, and this is 85% LTV. And now at an 80% LTV, we have that same for 2 to 4 units. We have that same amazing option as for the 1 unit, 7.75, our lowest cost option, and you can buy that down to 7%. And now for last couple options here, we have a cash out. I went ahead on our primary, went to 2 to 4 units, and this is a cash out option. 9% is almost at par, and you can buy that down all the way to 7.875. So that's pretty amazing. And our last example here, I have a 1 unit investment, 80% prime jumbo purchase. So these are very good rates here. 9% is almost at par, and you can buy this down to 8% interest rate for our investment property 1 unit prime jumbo purchase.
All right, I don't see any questions here. Yep. If anybody has any questions, definitely let us know. But conventional is coming back. Prime Jumbo is coming back. A lot of people were trying to go for arms. I don't think arms is the solution. Just had to wait it out a little bit here. And now we have some great options for both prime jumbo and conventional investments. Some of the things that were not doable before. Just a couple weeks ago, those prime jumbos weren't even doable, really, right, Jose?
Yeah, exactly. I mean, definitely not the 89.99%. We weren't getting compliant rates, but there's been shifting in secondary, definitely. We're seeing the prime jumbo rates pricing improve and LTVs then obviously increase because now we have compliant rates up to 89.99%. So, yeah, it's pretty remarkable how the dynamics are working right now. Prime Jumbo, DSCR, I-10, to name a few sectors that are definitely getting some good secondary market capital inflows because we're seeing the improvements in the pricing and we're seeing the relaxing of guidelines as well, right? FICO scores in some cases dropping, LTVs increasing. They're giving us more options to originate their products.
Yes, sir. All right. Well, if there's no more questions, feel free to email us. And to all our team out there, definitely recommend quote up some conventional prime jumbo options, compare it to the non-QM options. Definitely some action now. And we will be back. We do this every morning at 11 a.m. Eastern. So we will be back on Monday with a brand new episode and a brand new topic. So thank you, Jose. And we will see everybody Monday.
Thank you, everybody. Have a great week.